Welcome back everyone, and in this video, we're going over two high dividend stocks that may be a great buy right now. Both companies have a current yield above 4% and are expected to continue to grow that dividend for many years in the future. And right now, with the market being extremely volatile, many investors are turning to income producing assets to get them through these crazy times and having that comfort with that consistent and growing cash flow coming into their portfolio every single quarter. And right now, even when my portfolio drops hundreds or thousands of dollars in a single day, I have absolutely no worry because my consistent cash flow from my dividends has not changed. None of my companies have cut their payments, although we have seen some red in the market. And we can see every single week, I continue to collect my payments from my nice, strong blue chip companies. And in this video, we're going to take a look at two high dividend stocks that are trading at very fair valuations right now and maybe a nice addition to an income portfolio going forward. And before we take a look at stock number one, as always, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and any major market news. And of course, today we're going to focus on some income producing assets. And the first stock that we're going to go over is ticker ABBV, which is ABBV. They currently trade for $106 per share, and over the past 12 months, the company is up just over 17%. And right now, they have a current market cap of $188 billion and a very low valuation with a forward PE of only 8.6. So right now, this is one of the top value plays on the market that has a lot of future growth potential. And with this very low forward PE, you get a massive 4.87% current dividend yield. So this is a company with an extremely high yield that is very hard to find on the market these days, but also provides investors with a ton of value. And at this $106 mark, if we take a look at their Morningstar report, they are trading right around their estimated fair value of $106 per share. And we can take a look at the chart. Their current price sits right above the estimated fair value, which is extremely impressive. So to lock in a high yield and paying a good price is always a great sign. And ABBV has been a great investment for their total shareholders over the past 7 years. We can see since 2013, they've been growing their annual revenue at over 13% per year, and their earnings per share have grown at close to 19% annually. And overall, during the past 7 years, their total return to investors is at 342%, and over that same 7-year span, they have grown their annual dividend payment by a total of 225%, which is absolutely insane. So this company has performed extremely well over the past 7 years, and analysts are expecting this growth to continue for many years going forward. And if we take a look, they have some leading products in the healthcare and pharmaceutical space. And right now, ABBV owns the leading product in 5 different consumer categories, and each of these number one sellers has almost a majority of the market share within each. And going forward, they are not focused on their current products, but also have a massive pipeline in the works. And we can see that within all the stages of development, they have numerous different drugs and products in the works. And over the next 3 to 5 years, as they continue to advance their development, we're hoping for a couple of these to hit the market and become great success. And going forward, they have 2 main products that by 2025, they're expecting to absolutely explode and bring in more than $15 billion in global sales. So right now, these products are still late in the development stage and really aren't available for sale on the public market. But within a 5-year span, they're expecting over $15 billion in annual revenue, and these products aren't expected to peak until the 2030s. So a ton of future growth and revenue generation from these 2 names over the next few years. And if we take a look, all this potential growth is coming from a company that has a massive dividend yield at this point in time at a 4.87%. And this crazy high dividend only makes up 42% of their net income, so I believe it is very sustainable over the short and medium term. And their 5-year dividend growth rate is spectacular, averaging over 18% annual growth in that cash payment to their investors. And if we take a look, ABBV year over year has done a terrific job of growing their total net income. And even throughout 2020, a very tough year for many companies, they actually saw a great expansion in their total revenue number, going from $33 billion back in 2019 all the way up to $45.8 billion at year-end December 2020. And overall, the graph is trending up in the right direction, which is a very good sign. And if we take a look at their net income, it does fluctuate, but averaging between 5 and 8 billion each and every year over the past 5 years. And taking a look, right now, analysts are expecting another 14% growth in their share price over the next 12 months, and the average price target sits at $122. And right now, ABBV is considered a buy with 6 strong buys, 12 buys, and 5 holds, and no one is selling out of this company. And we can see over the past 6 quarters, they've done a terrific job of continuously beating analyst expectations each and every time. And for the next 2 years in the future, for 2021, we're predicting close to 21% annual revenue growth. And from this current point, by year-end 2022, we're expecting close to 29% revenue growth and that number to cross $59 billion. And right now, Yahoo Finance analysts also have ABBV as a buy, coming in with that 2 rating, and their 12-month price target sits at $121 per share. So overall, ABBV is a very interesting company on the market right now. They are trading right at their estimated fair value according to Morningstar, and with a close to 5% current yield, I am personally considering adding more shares of ABBV to my personal dividend portfolio as well, because I think this is a brand that can succeed over the long term. And just for transparency, right now I currently have a position in ABBV. I own 16 shares with the market value of close to $1,700. And on this position, I'm currently up 35%, and my average cost per share is at $78. And that just shows that even though I'm up so much and my average cost is so low, I may still be adding more. And now if we move on to the second high dividend stock in this video, we're going to take a look at Duke Energy. Ticker DUK, currently trading for around $90 per share, and over the past 12 months, the company is down more than 11%. Right now, their current market cap is at $68 billion, and they're trading with a forward PE of 17. And this is another nice high-yielding company with a current rate of 4.36%. And at this current level, Duke Energy is actually considered to be undervalued according to Morningstar. They are given a 4-star rating, which means the company is slightly undervalued, and the estimated fair value per share sits at over $95. So at this current point in time, Duke is trading at around a 9% discount from their estimated fair value per share. So to get a nice high-yielding company when they're actually considered undervalued may be another nice addition to a solid income-producing portfolio. And if we take a look, Duke is expected to grow between 5 to 7% over the next 4 years through 2025. And taking a look as a whole, they're predicting to give investors a total return of about 10% per year, which would be absolutely incredible from a slow growth, consistent utility company. With that current yield above 4%, plus their estimated 5 to 7% long-term EPS growth, they believe those combined will generate a total shareholder return of over 10-ish% per year. And right now, to own a nice high-yielding company and get a potential 10% annual growth rate, you really can't complain. And with Duke, they are the definition of consistency. No matter what, consumers are going to be in demand for their services, and over the long term, their earnings base is only projected to grow each and every year, from $73 billion to a projected $100 by 2025. And their gas utility earnings base is expected to follow a similar trend over the next 5 years as well. And if we take a look at Duke's dividend, that massive 4.36% yield makes up around 74% of their total net income, which is on the high side for most companies, but in the utility sector, they can maintain a higher payout ratio between that 70 and 80%. And that high dividend is growing at around 3.2% per year, so it is matching or slightly outpacing inflation as time goes on. And now if we take a look at the company's financials, we're going to start off with their income statement. Total revenue year over year is growing at a very slow and consistent rate, which is what we're expecting from the utility sector. In 2020, they did see a slight decline, but nothing too worrying. And if we take a look at their bottom line, net income tends to fluctuate between 2 and 4 billion each and every year. But when evaluating this type of company, net income is expected to fluctuate because of their high expenses. But if we take a look at their cash flow statement, as long as their cash flow from operations are growing year over year, we know the company is trending in the right direction, which is exactly what Duke Energy is doing. Back in 2016, they generated 6.8 billion cash flow from operations. And we can see as time goes on, that has continuously increased to a high point in 2020 of 8.85 billion, which is a very strong sign. With these companies and their income statement, that fluctuates over time, but as long as their cash flow, the money they actually generate from conducting their everyday operations, is growing, we know the company is expanding and turning in the right direction. And taking a look at this current level, we're predicting a 14% upside in the share price over the next 12 months to over $100 per share. And at this current level, analysts do have a hold rating on Duke with 1 strong buy, 5 buys, and 11 holds, but I have to disagree. When this company is trading at an undervalued mark, it is time to buy with such a high yield. And going forward, the annual revenue is projected to grow by 8.8% in 2021, followed by around 5%, so a total growth of over 12% during the next 2 years. And with regard to their bottom line, from this current point, we're projecting close to 20% annual earnings growth for the next 3 years in the future. And we can see the slight dip in 2020 due to the pandemic, but going forward, that's expected to rebound, and total income and revenue are projected to grow each and every year at a consistent rate. And Yahoo Finance currently ranks Duke as a 2.6, so they are between a buy and a hold, so a very weak buy or a slight hold on the company according to this group of analysts. And over the next 12 months, their price target is at $100 per share, so above the $90 level at this current point in time. So definitely another consistent player with a nice high dividend if you're looking for some income during this crazy market time. So overall, guys, we're going to wrap up the video. We took a look at 2 nice high dividend paying companies today in ABBV and Duke, both current yields above 4% and are trading right at or below their estimated fair value according to Morningstar. So definitely some nice valuations to get into right now if you're looking to bolster up that passive income in the form of dividends every single quarter. So thank you for watching to the end. If you're new to the channel, please hit that like button and subscribe. I am the Gen Z Investor. We post every single day, so I will see you in tomorrow's video.